Hello, finance enthusiasts, and welcome to another financial thrill ride that is Night Fury Digital Finance. Today, we're unraveling the mysteries of two of the most influential financial terms, hawkish and dovish. While hawkish and dovish might sound like terms reserved for the financial elite, in reality, these terms have a direct impact on everyday folks like you and me. So, buckle up and stay with us till the end as we uncover the how and why behind their impact. But first, just a quick favor. If our content resonates with you and adds value to your financial wisdom, please give the video a thumbs up and hit that subscribe button. It would truly help us out. And just a quick heads up, the insights we're about to share are simply based on current financial trends and are not tailored to be financial advice. Always consult with a professional before making any financial decisions. But if you're keen on making informed financial decisions, and we bet you are, then let's dive right in. First up on our financial runway is the term hawkish. No, we're not talking about a bird-watching session, but rather a stance central banks adopt when they want to keep inflation in check. In the words of finance, when we say a central bank is taking a hawkish stance, we mean they're likely to increase interest rates. Think of it this way. Just as a hawk has a keen eye for its prey from high above, a hawkish policy aims to keep a sharp eye on rising inflation, swooping in with higher interest rates when necessary. But why should this matter to you? Well, higher interest rates can mean your loans and mortgages might get a tad more expensive. On the flip side, if you're a saver, this could be good news for your bank account, as you might earn more interest on your savings. Now, let's flutter over to the dovish side of things. In contrast to its hawkish counterpart, a dovish stance is adopted by central banks when they aim to stimulate economic growth. This often translates to lower interest rates. Picture this. Just as a dove symbolizes peace and calm, a dovish policy is all about creating a peaceful economic environment, making borrowing cheaper and encouraging spending. For the everyday individual, a dovish stance can be a double-edged sword. On the one hand, if you're looking to borrow money, be it for a car or a home, lower interest rates would be in your advantage. But if you're on the saving side of the spectrum, your bank account might not be singing as joyfully, with reduced interest on your savings. In simpler terms, a hawkish or contractionary policy aims to tighten the economy by reducing spending, while a dovish or expansionary policy seeks to boost the economy by encouraging spending and investment. Having navigated the skies of hawkish and dovish policies, let's land on solid ground and dissect their distinct characteristics across three pivotal arenas. 1. Their objective. The hawkish approach zeroes in on taming inflation, often by considering hikes in interest rates. The dovish strategy aims to stimulate economic growth, often by lowering interest rates. 2. Their economic impact. Think of hawkish policy as the strict parent reining in the economy when things get too heated. On the other hand, dovish policy is like a more lenient parent, encouraging the economy to spend in order to get things moving. And 3. Personal finances. In a hawkish environment, borrowing might pinch your pocket a bit more, but savers could have a reason to smile. On the other hand, in a dovish climate, borrowers get the upper hand with more budget-friendly loans, but savers might feel a tad underwhelmed with their returns. And understanding these distinctions is vital, whether you're eyeing that dream home, kickstarting a venture, or simply setting aside funds for unforeseen days. So, why should you, lounging on your favorite sofa with your go-to beverage, care about these bird-themed financial terms? In a nutshell, these monetary policies can dictate the cost of your loans, influence the returns on your savings, alter your everyday expenses, and even shape job opportunities in the economy. While they might sound distant, their ripple effects touch our wallets and daily lives. And that's precisely why it's crucial to stay informed about which policy is in play at any given time. And there we have it, folks, Hawkish and Dovish. Next time you hear these terms, you won't just think of birds, but of the broader financial landscape and how it might be time to review your financial nest egg. If you found this deep dive useful, please don't forget to give us a thumbs up and subscribe for more financial insights. And hey, drop a comment below on which financial topic you'd like us to demystify next. And always remember, the bank of knowledge always pays the highest interest.